Good morning. In this presentation, we are going to see how you should have applied our simple day trading method on yesterday's market. You can see this red color candlestick that indicates yesterday's price opening, which shows that the market opened somewhere near 7,110. And you can see this was the yesterday's price opening, and the color of the candlestick was red color, which indicates that the price can come down. The price was also trading below our green color moving average line, as we know that the price was dropping from a very long distance right from 7400 zones. So yesterday also the price opened lower. Whenever the price opened with a gap or lower, what we had told you is that wait for the price to come and touch this first white line, and if the price touches when the price touches this first white line, and if the color of the candlestick was in red color, you can enter for the sell trade. But on seeing this particular situation, it is since this video is for educational purpose, we want to explain this. Just we need to apply certain logic into this, because since the price, if you see that since the price was dropping from a very long distance, you can see the since the price was dropping from a very long distance, right from 7400, we can say that it was quite riskier for you to take this particular call. That was during the price opening. Let me drag this to the yesterday's market here. In this particular case, you may assume that it was risky, but we will take this everything into account. Here I am going to increase the scale. You can see that this would be probably our entry point, and our stop loss would be somewhere in this zone based upon the second white line. If you had we are assuming that if you are taking every single trade without any logic, based just based on the signal our charting platform was providing. Now let's see that after you enter into the trade, it is a straight away the price went and triggered the stop loss. So I am going to delete this. So we will continue our explanation till the end of the market. So the color of the candlestick was changed to blue color, which indicates that the price can go up, but since the price was trading below the average line, we are not going to enter into the trade. So now you can see after touching this green line, the price again dropped, which indicates that the momentum for selling was still on. Here you got another entry point. This is also probably the second entry point which we had. So this is also an entry point. Now your stop loss would be somewhere here. Now let's see what happened here, and here you got that profit. So now you can see here you made some good profit. The price came down just above 20 points. So I'm going to delete this. As we had told, always you should have the habit of modifying your stop loss. Initially in this particular case, you would have seen the stop loss was there, but the next time you can see that we are decreasing our stop loss. So I am going to delete this since it had provided you some profit. So we are going to delete this, and we are going to wait for second opportunity. It is a matter of chance. In this particular case, again in the same area the price is dropping, so probably here we would not have taken any entry point. So we will be waiting for it, since you can see in this particular area the price entered and the color of the candlestick was blue, and the price was trading near this green color moving average line. So what I'm going to do is that here in this particular area, you know that you should follow that 7-point rule, which means that just above 7 point you will be into the trade, and just below 7 point is you are going to be a stop loss. Here you would have entered the trade and your stop loss would have been triggered. So I am going to delete it. So as for the count, that 2 times we got stopped out and 1 time we were in profit. Now let's continue this trade, and again you can see the price was bouncing back above 7 points from this green line. In this particular area, we had made it very clear that what you should do with the entry point is based on the 7-point rule, but the exit point, the stop loss, is going to be the lower line. So this is going to be a stop loss, and you should always have the habit of increasing your stop loss. You can see that how we say that increasing in the sense you are decreasing your risk. So in this particular case also, the price went up and it provided you some good profit. So whenever you get some profit, you can see the market was giving you enough profit to cover all your losses also. So we'll be waiting for the next entry point. Here the price didn't came down below 7 points, so we are not entering into this trade. So we will be here in this particular case after yesterday's market, the market had provided us a lot of opportunities for entering and exiting. So in this particular area you would have entered based upon the 7-point rules, and in this area you would have placed your stop loss based on 7-point rule. So what happened is that after entering into the trade, your stop loss got triggered. So we are going to delete this, and you know that we have crude oil inventory report also. Yesterday around 8:30 p.m. we got a crude oil inventory report. So now we'll be waiting for that. You can see the price was consolidating here for a very long time. It is not providing you any signal. Here the market had provided you an entry signal, probably around 7,200 you would have entered into the trade. 7,200, and your stop loss is always based upon the next. You can see the bottom and the second white line, or you can call it as a channel or band, whatever it may be, and you should always have the habit of increasing. See how I am modifying your stop loss. So in this particular case, after entering, within a fraction of seconds the market, you can see the market went up for 25 points. So you should be very careful. I am going to delete this, because what we had informed you is that it has got the potential, and all the entry point will have a minimum potential to give you 20 to 25 points. So I am consider this as a profitable trade. Then we got another entry point. You can see now we are getting a lot of entry point here. You would have entered somewhere based upon the 7-point rule. You would have entered around 7,160, and you would have placed a stop loss just above that. Now you can see after the entry point the price came down immediately, because within a fraction of few minutes you can see the price came down more than 20 points. So we will consider this as a profitable trade also. And you can see the next entry point, you got the next entry point here. Here you would have entered based of your entry point would have been here, and your stop loss was based on the lower white. So always you should have here in this particular case you are stopped out. So we'll be waiting for another entry option. So here we got another entry point. You can see here you got another entry point in this particular area after the report. Now you can see this is the area where you got this crude oil report. In this particular area you should be very careful with that. In this particular area we got crude oil inventory report. So now we can see this entry went up in profit. So yesterday the market gave you lot of entry and exit options. So yesterday market, you can see the market provided you a lot of entry points. On a conclusion, we can say we got a few stop loss. We only few times we got stopped out of the market, but most of the times we entered and ended up in profit. So this is one of the best way to use our simple day trading method. And if you are not our client, just watching our videos, kindly open a trading account with us and make use of this wonderful revolutionary trading platform. And thanks a lot for watching our videos. Happy trading. Take care. Bye.